Welcome back. That's the SGX Nifty down about 190 points. So the start will be rough and then we'll take it from there. We have Deven Choksey now joining us from KRChoksey Securities. Deven, hi, good morning. Thanks a lot for joining us. Deven, let me start with the large banks, because we had a all-time high on the bank Nifty just about 10 days back, and now that index has fallen about 8%. What's your view on the large financials and which ones would you buy in this dip?
Good morning, Anuj. Well, I think the subject of lending, I think, which is basically, I think, to the corporate sector, is now probably gaining more momentum. And I think most of the larger banks, including SBI and also, I think, along with that, likes of NBFC, even Axis for that matter, ICICI, all of them have basically been showing an exceptionally good sign of, I think, increasing the lending book towards the corporates, which up till now in last few many years, I think, has remained on a muted side for most of these banks. And I think as a result of which, we are likely to see a higher amount of credit growth continuing from this particular segment as well now. And at the same time, on the other side, we have the retail credit, which is basically expanding at a very steady pace. Some of the private sector banks are growing at around 20-25% rate of growth even in the retail credit space. So that remains, I think, extremely convincing. The companies which are basically into the housing finance, they are also seeing a higher amount of traction with 20% plus kind of a growth. So including priority sector lending, some of these large banks are now having more or less, I think, higher amount of contribution coming from corporate, is having a balanced portfolio. My take would be that I think these banks are looking really interesting from the investment point of view. India investment cycle is actually opening up and higher amount of credit demand is taking place. So given that situation and given the price correction, probably I think many of the corporate banks, particularly in private sector, are available at a price to book value, which is
Okay, Deven, hi, good morning.
Far more comfortable than it was ever before, given the kind of a growth that we have.
Sorry, I got that. Good morning, Deven. Now, what are your thoughts on cement? Because this morning, CLSA has upgraded ACC to an outperform and raised the target price to 2,700 from 2,300. But on the flip side, they've downgraded Ambuja to a sell from an underperform. Just wanted your thoughts as a long-term investor. Would you buy any of these cement names now?
Yeah, good morning, Sonia. Demand scenario remains absolutely convincing, and I think there is no second thought on this particular subject. I would think that on the contrary, the demand scenario would remain extremely robust. Having said that, I think many of the cement companies in smaller pockets are likely to face the pressure on the cost side. If the pressure on the cost side is higher, then probably I think some amount of impact is going to be seen in on the margin, particularly I think the small to mid-sized cement companies. The larger cement companies, in my viewpoint, I think would be in a better position to beat the pressure on the cost. And to a greater extent, I think they would probably produce higher amount of profit performance. So cement is clearly a buy, and maybe I think some of the larger ones, including the ACC Ambuja combined, including I think the Ultratech, they remain a relatively better place given the kind of a demand scenario and given the kind of capacity that they have. I would think that there are two groups of companies, I think, which are relatively better placed compared to them.
Okay, well, let's also talk about some more stocks. So, Deven, just stay on.